Global and I'm a Senior Employee Benefit Consultant here at Drewberry. Today we're going to talk about salary sacrifice in relation to workplace pension schemes and the benefits for you as the employer and your employees. Salary sacrifice is also known as salary exchange, and it's where the employee agrees to give up part of their gross salary in favour of a non-cash benefit, for example a pension contribution. In relation to the pension scheme, the employee agrees to give up part of their salary in favour of a pension contribution. The advantage to this is that they're reducing their salary and therefore paying less national insurance on the element of the salary that they've given up. The advantage for you as the employer is that if the employee is reducing their salary, you're saving on employer national insurance as well. If you're operating salary sacrifice in relation to the workplace pension scheme, the amount contributed depends on the contribution structure for the scheme. By law, the minimum contribution must be 8% of qualifying earnings, of which as the employer you must pay 3%. If you pay that minimum 3%, it means the employee is obliged to pay 5% to reach that 8% in total. If an employee is automatically enrolled into the pension scheme but elects to opt out, you as the employer are not required to make a contribution on their behalf. However, you will be required to enrol them usually every 3 years. So if we look a little bit more about the advantage of salary sacrifice, from the employee's perspective, because they're reducing their salary, they're actually paying less tax and national insurance, which means their take-home pay increases slightly. If you're a higher or additional rate taxpayer, there's also no need to reclaim any further tax relief back as part of your self-assessment, because you'll have received tax relief at your marginal rate on the element of the salary that is sacrificed. If we look at it from the employer's perspective, you're saving employer national insurance at a rate of 13.8%, and that saving can be used, for example, to offset against other benefits, or alternatively, you can pass it back to the employee to enhance their pension contribution. You can pass the full amount back or a percentage of it back, and the remainder can be saved if you wish. If we look at the employer national insurance saving in a bit more detail, let's say we have an employee with a salary of £30,000. If their pension contribution equates to £1,500 per annum and they're contributing via salary sacrifice, it means that the employer national insurance is being taken from just £28,500 rather than the full £30,000. So that's where the saving comes in. And with that saving, as the employer, you have a number of options. You can pass it back to the employee to enhance their pension contribution, so they've got more going into their pension, or you can reinvest that saving back into the business. For example, that can be used to offset other benefits. Or if you wish, you can do a mixture of both. So you can pass some back to the employee to enhance their pension contribution, and the remainder can be saved and reinvested back into the business. So with salary sacrifice, there are two different methods that you can operate in relation to your workplace pension scheme. There's simple salary sacrifice and smart salary sacrifice. With simple salary sacrifice, the employee NI saving basically gets passed back to them in their net pay, so actually they see more money in their pocket at the end of the month. With smart salary sacrifice, that employee national insurance saving goes back to enhance their pension contribution, so therefore more gets paid into their pension. It is worth noting that not all payroll providers can operate smart salary sacrifice, so it might be worth checking with them before deciding which method you wish to use. Now, it's also worth bearing in mind that salary sacrifice might not be advantageous for all employees. For example, if you've got employees on the minimum wage, reducing their salary further can have an effect on their state benefits, so we wouldn't recommend using it if you have employees in that situation. There are also other considerations to take into account as well. For example, it can affect an individual's ability to borrow money. The obvious one here would be applying for a mortgage. In reality, a mortgage lender will look at affordability, and you can always provide a letter showing their pre-exchange salary that they can share with the mortgage lender, but it's something that's worth bearing in mind as well. The final thing is that a salary sacrifice agreement should be enforced for up to a year, subject to what we call a lifestyle event. Now, a lifestyle event may be something like getting married or the birth of a child, something that can have an impact on the individual's finances. Otherwise, a salary sacrifice agreement should be in place for 1 year. You also need to consider the additional administration with a salary sacrifice arrangement. For example, making sure contributions are deducted properly, working with your payroll provider to make sure that they're aware of the deductions that need to be made via salary sacrifice, and to ensure that they're paid to your pension provider in the correct way. Final thing to consider with salary sacrifice is whether you make it the default method for making personal contributions or whether employees have to opt in. It's worth bearing in mind that if it's the default method for making personal contributions, you can't force employees to contribute via salary sacrifice. They do have the option of opting out. If it is an opt-in method, please bear in mind that take-up rate might not be as high if employees are required to make an active decision, but you can operate either default method or opt-in method depending on what you wish to choose. So we've looked at how salary sacrifice works in relation to your pension scheme. We've looked at the advantages, the potential drawbacks, and any considerations that you should bear in mind before implementing salary sacrifice. However, if you do have any further questions, please do feel free to reach out to us. We're more than happy to help answer any questions you have, talk through implementation of salary sacrifice in more detail, and we're here to support you should you wish to proceed any further.